Bulls off to a strong start here at the close of the daily candle of Bitcoin as we creep into another day prior to a big FOMC announcement. Market is expecting a 5 to 7% move tomorrow. Are you on the right side of it? Find out in today's exciting episode of Breaking Bitcoin. Button did not click fast enough for me there. Welcome back, everybody, to another episode of the Breaking Bitcoin Market Update. I'm your host, Justin Wise, lead analyst at KrakenCryptocurrency.com. Hopefully, everybody is doing fantastic. We've got another beautiful trading session to break down today, opportunities to talk about on the daily time frame, the weekly time frame, and as always, I will give you insights onto how I view the markets, what I think is going on, and what the best opportunities are from a risk to reward perspective. Before we get started, as always, if you would like to support the show, the like button is right down there. It's right next to the subscribe button. And if you'd like to get involved with our community, we have many ways, many things that could help you out. Lots of links down in the description to get involved. Any questions, feel free to pop them in the live chat. And with that out of the way, let's get started, guys. All right, so here we are in the live scene. Yo, 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 guys. Here we are in the live scene. We just saw an exciting... it's exciting, like 1 hour candle over here that just closed. Nice break above resistance right now. And the bulls giving back a little bit of that progress as we speak rapidly. All right, let's what's going on today? So as you guys know, yesterday we took the intraday long. And so we actually just hit take profit 1 on this wick. And I want to talk today about a very important concept. In fact, it was so important for me that as I came to my computer this morning to begin trading after my workout, after I got the kid to school, after everything was ready, I sat down to begin trading. The first thing I do every morning is I analyze the market, update my day trades, and then I write my newsletter for the week, or excuse me, for the day. Newsletter goes out to everybody. I will have to put a link in the description. I'm definitely not putting a link in the description so that you guys can sign up for the newsletter, but I will put that in the link for the next few videos so that you guys can get on the newsletter list if you guys are not already on it. But I put out a daily publication where I break down what the moves are in the current market, everything from the weekly all the way down to the daily. And that keeps me sharp. I do it because it makes me a better trader, and hopefully you guys find value in that. So, This was so critical that I wrote it down, and I want to talk about it kind of at length today. And this revelation occurred to me. So let's go find out where on the chart it was. So it was about right here, about 8 a.m. my time. And this is something that happens so frequently with trading. And I see this so often in not necessarily on the daily time frame with cryptocurrency, because when we're doing big swing trades, the candles, when they move in our favor, tend to be quite large. So perhaps this issue isn't so prevalent on the daily time frame, but it is certainly very prevalent on the lower time frames if you're trying to do any sort of intraday trading or lower time frame trading. And to be honest, now that I think about it, with those words out of my mouth, who am I kidding? This is absolutely something that comes up regardless of what time frame you're trading, because it's just going to be it's going to be ubiquitous across all time frames. So what is this issue that I'm talking about? The issue is you enter into a position. Let's say you got long anywhere around here. You got long anywhere around this kind of lower consolidation region, as we talked about yesterday, this being a relatively high value area. Breaking down my trades, not to get into all of them, but essentially the only day trade that I took yesterday as price kind of collapsed into this consolidation zone, I did take a long from this area. And let's go over to our volatility screen for the hourly so we can explain why. Again, volatility spiked right here, as we can see from these 4 red columns. And typically when that happens, it's a good indication that price has a high probability to reverse. That occurred in combination with the stochastic RSI being oversold, quite a good indicator for lower time frames, and Minx as well. See, as you can see here, Minx is not quite oversold. Minx gets oversold when you should buy, right over here. And so I like to see that the tools I create actually tell me when I should and shouldn't trade. But anyways, So I took the long here, had a losing trade, and then I went at it again because we reached yet another point of quite high volatility, a regular bullish divergence this time with a lower low and a higher low on the oscillator. And now finally in this range, Minx was finally oversold and kind of giving the green light there as well. So I did accumulate the long here, just about half a Bitcoin, as you guys will recall from yesterday's show. And this morning, and then again, obviously, as the night progressed, I wasn't looking at the chart, but as the night progressed, I was moving further and further into profit. And then as I came to the computer this morning, was on this candle. It's about 8 a.m. my time. And as you can see, we had a nice 1% up move. Now, this is a day trade, so I would have been happy with that movement. But I'm sitting there looking at the charts, and I'm thinking to myself, because here's what I saw. You look at the charts, you see that price has moved in your favor, and then you'll see a red candle. You'll see a red candle. Maybe you'll see a big wick to the upside, and you'll start thinking to yourself, oh man, whew, big wicks to the upside, red candles. This is exactly what Justin said price looks like when it's going to reverse. I should just nab my profits now and get while the going's good. I should just take my profit here, forget about my take profit, forget about my stop loss, forget about the plan. I'm up. Let me snatch these profits here real quick and sail off into the sunset. And let me tell you, I have made that mistake so many times throughout my trading career, and it is a terrible mistake to make. It is one of the worst mistakes you can make. You are essentially saying to your former self, the former you who planned the trade out, who sat there and analyzed, okay, what would be a logical take profit area? What would keep me within a risk to reward balance? Where would I make sufficient profit? What take profit level is worth my time as a trader to invest and risk my capital for this trade? You're basically telling that former you that the former you is an idiot. The you of the now is way smarter than the you back then. You know what's going on now. You're hip, you're cool. Screw that square. And so you're going to take profits wherever you feel like it because it just feels right, because you just have a feeling. Let me tell you something. Your feelings in trading probably suck. Mine definitely do. All right. There's no, this is not how it works. It's mechanical. It's discipline. It's strategy. It's routine over and over and over and over and over again. That's how you get really good at something. It's not Rain Man analyzing the charts, seeing patterns that nobody else sees. That's not real. That's nonsense. The reality of trading is it's rinse, wash, repeat. Rinse, wash, repeat. It's over, or wash, rinse, repeat. Wash, rinse, repeat. You probably don't rinse before you wash. I don't know. Back in my day, we always rinse before we put the dishes in the dishwasher. But now they tell you not to do that. I don't know. So anyways, so I pulled up my notepad, as I often will do, and I'll actually show you guys here. I jotted this down, and I wrote here, when trading lower time frames, that urge to take profit when you see red candles, ignore it. This has cost you more money than you can imagine. Plan the trade, trade the plan. If it doesn't hit your TP, that sucks. Don't move TPs. Period. Period, with a capital P. We don't move take profits. We trade the plan. Whatever we established for the initiation of the plan is what we're going to see through to the follow through, what we're going to see through to the end. Doesn't matter what price does in between. It either hits our take profit or it doesn't, period. There's only one other situation, if you guys are familiar with the Pathways to Profit trading methodology, there's two other situations in which we would exit a trade prematurely. And that's if price were to cross across our baseline, right? That's called a fail-safe exit. That's programmed into the strategy. Or if we get an exit indication. And we need to have a very specific, predefined, what is that signal? Was I getting any of those this morning? No, I wasn't getting any of those this morning. I was just feeling a little greedy. I felt that urge to take profit, which also just goes to show you that it doesn't matter how long you've been doing this. I've been doing this in cryptocurrency for 5 years full time right now. I've been trading almost twice as long prior to that. So it just goes to show you it doesn't matter what your level of experience or skill is. This idea that you are just going to one day wake up and be more disciplined, better. You will become more disciplined and better, but your natural inclinations and urges, the emotional pulls of the market, are still extremely powerful at whatever level of experience. And this is why you'll hear of massive hedge funds getting blown up, because everything was fine when they were following the plan. when they were planning the trade and trading the plan. And then all of a sudden they get greedy. They see the dollar bill signs. They see red. They get mad. And they start trading emotionally. And all that discipline, all that work, all of it goes out the window. Just like if you're in a relationship and you've put a lot of work and time and energy into it. And then all of a sudden one day you get mad and say some things that you shouldn't. Well, you've just, she gone. So don't let your emotions get the better of you. Stick to the plan. Logic is power. Discipline is logic. Trade the plan. So I held the position open. And guess what happened, right? Guess what happened? Price pulled back. Oh my God, I'm an idiot. What should I do? Boop, there goes my take profit, right? Every moment in the market is unique. The market is inherent. The market has a heavy element of randomness in it. You can have the best strategy in the world. You're still not going to know for sure which way price is going to go. The best thing you can do, open yourself up, have a good strategy, and just let it go. Just let it happen. Let the trades flow. Stop overthinking it. Stop moving your take profits. Stop playing around with all these different things. Pick something, stick to it, grind it out. You know, I've said this many, many times, but it's often, I've found, it's often the people who come to our trading group to learn how to trade, who take the Pathways to Profit course. In my experience, the people who come in not really knowing anything about the markets, not having any preconceived notions of how they should trade, not having any prior strategy, those are the people who do the best because they're not concerned with trying to change it, modify it. Like I've done all that work for you guys. I've done all the testing and trial and error and countless hours of back testing and massive losses and this and that. So I know what works and what doesn't. And so when students come in and they just have that learner's mindset and I tell them, this is all you need to know, just do this. And they do very well. And the students who end up needing the most help are the ones who come in with preconceived notions, with previous strategies, who want to try and change the formula, change the system, change the, combine it with this over here, play with this shiny toy over here, right? And there are 1,000,001 ways to trade. Mine is not the only way that works, but it works. And if you just stick to something, commit to something, it will work too. So it doesn't matter what you pick, but pick something and stick with it. And that's true for rules. That's true for indicators. That's true for strategies. That's true for take profit levels. That's true for stop loss levels. That's true for position sizing. True for everything, the whole package, the entire 9 yards. All right. Whew, diatribe. Shout outs to the chat. Let's also switch over to a different scene. And we'll just expand this pupper out a little bit. Okay, how's everybody doing, man? Sound off in the chat if you're having a great day. Sound off in the chat if you're making money today. Hell, sound off in the chat if you're losing money today. Let me hear you scream. Ernest of Gaia, shout outs to you and cheers. Dan says the bulls are back, baby. Evo says same move like the last meetings. Here's the thing, right? With Bitcoin being as extended it is to the upside on the daily, if we have a 50% rate increase, I feel like we're going to crater. And all that profit taking is going to get amplified 10x. But if we have a quarter, I think we could fly. Crypto Rick says, yo, Evo thumbs up. Kemozabi says it's a bullish dump. Going to be doing that for the next little while. We've got Corey Sheehan. Happy days to you as well, sir. Kemozabi says, but I've learned so much since 10 minutes ago. Ron Legato says, I got bit like that on micro strategies recently. It kept going without me, but I'm not going to complain about, you said, so you did Tilldale 80%. So I'm hoping that's not negative 80%. I'm hoping that is approximately 80%, which is generally the normal usage of the Tilldale, not when you're not coding Python or JavaScript. So, or using the Linux console. So I'm hoping you got 80%, bro. Crypto Rick asked, what is the small moving average I have on my chart? I believe you're referring to this layout. And that is the 8 volume weighted moving average. Black Beauty Machine says we going up. We've got Mastache in the chat. Wang bang wang a ding dong. How you doing today, brother? Always a great day, says White on Rice. Ron Legato does confirm approximately. Excellent. Great use of the Tilldale, my friend. Okay. Take a sip of tea, and we're going to start breaking into it, guys. Okay. So Tuesday, let's go ahead and do our top-down analysis and see from whence we came, and see if there's anything that stands out to us. As we go through this, as always, if you guys see anything neat, interesting, cool, relaxing, neat, inspiring, let me know, and I would love to dive a little deeper into that particular subject. So here we are on the weekly time frame. Let's first start off with a trend analysis, and we are on the Bybit chart. That's not going to do. So let's go ahead and switch over to the highest volume, which is Binance USDT. We are tracking the price of Binance USDT. Okay, so again, Bitcoin in a bear market rally per my analysis. Why are we in a bear market rally? Several reasons, and this is going to be discretionary. All right, this is my discretionary analysis. So, one, we've never V-bottomed out of a bear market before. We've had nice bear market rallies. Also, three green candles doth not a bull market make. All right. We still have a lot of macroeconomic things hanging over our heads. And while I am excited about the Fed pivot, the switch to the CPI print, all of the things that I've been talking about for a while, and while I have, and currently am, more aggressively dollar cost averaging over the next quarter, the first quarter of 2023, because I do believe the Fed is pivoting and we're going to have the ability to move the markets up from here, because I am putting my portfolio to work. That's my investment hat, right? Like, I think in the very long run, and now even within the next 18 months, we're going to see cryptocurrencies move back into a bullish nature. Okay, great. So what am I doing as a result of that? Well, I'm buying more and putting it into cold storage. I'm not messing with it. I'm not trading with it because I'll probably screw it up. But as a trader, where I have a trading account that I use to trade, my goal with that is to not have to work a job. My goal with that is to grow that trading account to make consistent, regular income with that trading account. And I hope that's your goal too. And whether that you want that to be your full-time job and you want to be bringing in $3,000, $5,000, $8,000, $10,000 a month, or you want that to be your side hustle and be bringing in $500 to $1,000 with it, maybe more, then treat it like that, right? It's your trading account. It is not your investment account. We're not buying long-term positions with it. We're trading on the daily time frame. We're trading on the 4-hour, the hourly, the 15-minute, whatever tickles your fancy. Fine, but that's not your investment account. If you want to invest, you need to do it the old-fashioned way, right? Take X% of your income, your monthly income, buy something valuable, stick it away. That's how you do it. That's how you have the opportunity to really develop that powerful punch, grow a portfolio, develop some generational wealth, depending on what you purchase. But with your trading account, you're just trying to replace your wage slave job. You're trying to replace punching the clock. You're trying to replace grinding it out. Obviously trading is grinding in a different way, but the nice thing about trading is that it's unlimited, right? You can scale it as high as you want. And if you get good enough, well, cool things happen. Weekly time frame. What do we got going on? We are in a bear market rally. We are in a daily uptrend and current as a bear market rally. We are currently in a weekly uptrend inside of a broader or larger macro downtrend amidst a broader macroeconomic downturn. Okay. And again, I don't pretend to have all the answers. I do think that the Fed pivot is significant. I am not arrogant enough, however, to assume that or to proclaim that simply because this is happening, these other things must occur. Historically, we've seen that a Fed pivot is significant. And I think that with the current climate and with everything that's going on, I feel that the Fed pivot and the relaxation on the Fed to monetarily tighten and their pivoting to monetary expansion again would be very, beneficial for the markets. It's also very bad for late stage capitalistic thoughts about America, but I digress. Anyways, weekly trend, we are quickly approaching significant resistance levels in the form of the 200 weekly simple moving average and the weekly 55 exponential moving average, approximately 24,853 to about 25,000. Where is our 55 coming in at? 25,586. So again, about $1,000 zone where we would be looking for potential optimum entries. Now, keep in mind, we can, of course, wick higher than that, right? And if I'm completely wrong, we could completely keep charging past that. But when we're looking at high value potentials here, again, I'm looking to use this broad area on the weekly time frame between current price and about 25,000 to do two things. To scale out of my weekly long positions that I accumulated at about 17,000, which I have 80% complete on that task, and to scale into my weekly reversal positions, which I intend to take down to about 18,000, 16,000, and if the bottom drops out, 12 to 13,000. All right, now a 20% through with that process right there. All right, so 20% in, currently roughly around these prices, and we're going to enter the other 80% as price goes up. Yes, Robert Taylor, exactly. He says, so great point here. Robert Taylor says, historically, when the Fed actually decides to pivot and cut, we get the last leg of the bear market looking back in history around these high inflation times. I do believe you are absolutely correct. Yes, the evidence does suggest that. And thus why my recommendation for, let's take off the trading hat, put the investment hat back on. I think that the next quarter is going to be one of the most opportune times to dollar cost average, and slipping down below 16,000. If we do that, if we start descending down to 12 to 13,000, I think that is going to be the highest value area to accumulate for the long run. Okay. So that's why, again, and I think that confirms my overall plan here. Like, I'm not saying buy now. I'm scaling out of my weekly long and accumulating a weekly short. Now, just because we're going to have, like, we don't know how violent that last leg will be. That last leg might not actually make a lower low. We might stay above 16,000. Who knows, right? We are seeing some positive on-chain signs that this is not just your average bear market rally. Okay, but I'm not so easily convinced, and it doesn't really matter what Glassnode says to me. Again, you have to take these data sources with a grain of salt. So yes, I think that you're absolutely right. I think the time has come. I think that by the end of Q1, we could see inflation as low as 4 to 2%, depending on the monetary policies that are taken, and depending, well, not depending, like with the Bureau of Labor Statistics switched how they're going to calculate CPI. If nothing else were to change, inflation will go down because they changed it mathematically. Nothing actually is going to get better, boots on the ground, but their calculation of it is going to change. So just with that change, inflation will go down, and will continue to go down as we move the baseline for where we're measuring from. So as actual inflation actually ticks down, which it did, as for the last two reads, then we are going to have a smaller CPI print, and once we can get that number back below 3.5%, we can all congratulate the Fed for doing a good job, and they can officially pivot. So again, my timeline on that would be the end of Q1. Perhaps I'm being a little early on that, but I do think that seems logical. That seems to be what the individuals that I look to for information on this regard seem to agree on. So let's keep our eyes on the prize, and let's keep in mind the bigger picture here so that everybody can come along for the ride. We are looking in general for a failure of this current rally, a steep dip in price, potentially lower prices than we experienced last month, and for that to culminate in a selling climax. But essentially, here's the thing. You're never going to time the bottom. So my general recommendation is to view here to 13,000 as your dollar cost average zone. And if you want to wait, if you want to try to optimize your entry more and say, I'm not going to start DCAing until we actually crack 16,000 and start descending down into 12, 13, that's completely on you. I have all the conviction in the world that Bitcoin is a fundamentally valuable asset, that is life altering, that it is world changing. It's one of the best investments that I've ever made in my life. And I am going to continue to carry that tune. And if you guys would like to come along with me for the ride, click the subscribe button. Screw lower inflation. I want some deflation. I agree with you, Ron Legato. Let's scroll up here real quick. Saintsy needs a bigger cup. Oh boy. Are you playing rugby? All right, switching over here. Crypto Rick says, what's your thoughts on a 1.5 to 2x leverage long-term hold if we hit some really nice low prices? I think there's absolutely nothing wrong with that. I think you could even get a little bit, probably more. I mean, here's the thing. Yeah, so if you've got a 2x, if you have a 2x position, you've got a 50% stop loss. So that's pretty generous, right? Because let's think about that. So let's say we break down below 16K and let's say we go down to 13K, even if in that moment, or if we assume the price is going to go from 16,000 to 13,000, 12,000, you could be an absolute goofball, a donut, and go long your entire stack at 16,000 and then be in drawdown all the way down to 12 to 13,000. Your liquidation price is not until $8,000. So I think you're totally fine. But here's the thing too, right? Here's the thing, and also why now that I'm saying that, why I wouldn't do it that way, and why I would wait for prices to begin moving back. It's always going to be treacherous, man. Here's my point, because let's go back in time, and let's go back to 2020 to a little situation that we like to call the March meltdown. So I will forever remember. If you guys have watched the show, you guys know I can always go right to this candle. It doesn't matter what time frame we're on. This is the weekly. This is the March meltdown. And what happened was, at this point in time, BitMEX, I think that they were breached. I think that they had a data leak, some MySQL injection, something, because they're like, we started seeing, or just, market calamity, but we started seeing a malfunction of the liquidation engine. And the BitMEX liquidation engine just started going down the list and liquidating everybody, and it's basically attempting to nuke the market. And they had to go in and shut it off. Like they took BitMEX offline briefly to fix the issue. And as soon as they did, the market rebounded. Like we were all the way down here, like 3,756, and people were thinking it was the absolute end of the world because we had already been down here and we had this nice run and looked like we were heading back up, and then just monstrosity, right? This was like sheer terror, right? We were all live. We were up late. It was the good old days. And like the moment they took it offline, shoop, price shot back up. So especially when you're trading on a leveraged exchange, you want to be really careful because you get those really big scam wicks, and it just, it is what it is. It's the thing about cryptocurrency. So I feel like it's always safer if you're going to do something like that to not try in that sense to buy the bottom. I'm really talking about spot, right? I'm talking about accumulating a dollar cost average spot position. And then what I think you can do is, after we've seen maybe the lows and we start to see some recovery, then you can take that crypto and use that as your margin to take your 2x position, right? You're essentially going to use your spot position and you're going to use that as the margin to double up on it. Is a good way to do it. And personally, I would, if you were using, so the nice thing is this, you want to be as safe as possible. So you don't want to do all of that on one trade, on one account. I would probably split that across several exchanges so you can avoid that scam wick issue, because nothing worse could happen than if you just happen to get a scam wick on that particular exchange for whatever reason, and now it's just gone, man. So if you could split that up, so for example, on Bybit, you could split that up between sub accounts. I would split that up maybe on Kraken. That's where I like to trade too. I mean, honestly, I don't trade there too much, but that would be my solid backup, and they do offer margin. Binance, if you have access to it. And we know margin is coming to Coinbase, but God knows when. So Timo Zabi says, as per the Wyckoff method, this should be your show of strength. After the spring, should have a pullback to support eventually and rip up for a bit. Yes. Yes. So yes, a show of strength is something that typically trades above the previously established high, which we've done. Again, we could say, oh, we want it to go above this. If this is the automatic retest and this is the selling climax, then we have the spring, then we have the show of strength, then we jump the river, and then yeah, we're off. And essentially, again, the key point there, depending on where we might be at in that Wyckoff process, what if this is the selling climax, this is the automatic retest, and we've yet to see the bottom and the spring, and the spring is like goes down to like this, you know what I mean? Like that's the spring. Always a possibility. But either way, if that is the case, then that's fine. What we want to see is we want to see a higher low. You know, whether you want to look at this from Wyckoff, whether you want to look at this from smart money concepts, in any way, what we all want to see is a higher low. And yeah, Alex, our senior analyst, he loves Wyckoff. I like Wyckoff. He knows far more about it than I do, though. Robert Taylor says, don't need leverage if it's your entire stack / investment portfolio. DCing at those levels will make a lot of money in the long run anyways. Yeah, exactly. And I think that's, Rob, I think that's the right way to think about it. Yes. Leverage can be used in those situations, I think, with the nuances that I tried to break down there, again, for like your safety. But, you know, again, it's really risky too, man, because one scam wick and that position's closed out, whereas you can buy spot and, you know, the worst thing that can happen with a scam wick is you're just down more. Saints, he says, I seem to remember Alex rolling up his sleeves and filling his bag. Yeah, I like Kimozabi's point here. He said if you wanted to do a 1x or 2x leverage trade, it would make more sense to 10x that leverage trade with 1/10 of the capital, mitigation of the counterparty risk. Yep, exactly. Much if you're not trading on Bybit, there is a link in the chat. That's the way to do it, man. All right, take a sip. We'll try to get down to the lower time frames here. Okay. Buy miners on the way down. No stop loss. Hell yeah, man. All right, so that's about all I've got to say about the weekly. We talked about the weekly quite a bit yesterday. The daily is relatively interesting here. Again, as you guys can see, we have so far been unable to break above. You can see I have two red lines on the chart. We have what we like to call intraday resistance and daily resistance. All right. Daily resistance coming in at about 23,371 and intraday resistance at about 23,180. We would really like to see a close above those levels on a weekday. Remember, we discounted this because this was a Sunday. That's exactly what we said. Run on the Sunday, back on the Monday. Now, it is interesting. So we have closed below the 8 DEMA, and you can see we wicked down to the 13 DEMA. So I'm not going to lie. As a predominant trend following trader looking at this, I'm not mad at anybody who views this as a pullback, right? Who wants to take advantage of this and think we're going to push to the upside here. The longer that we kind of chill and hang out here, the more it makes continuation seem likely. Typically when we get rejection, it's quite violent and swift. But the reality is I think that we're just holding on for tomorrow's FOMC decision. And I think that if we get a 0.25% basis rate increase, then we have the potential to fly. Doesn't mean we will. But I think if we get an as predicted 50% increase, then we're gonna go down, guys. We're gonna go down. Now, it kind of pains me to say that because, again, I am a trend following trader, and predominantly I would prefer to be taking this to the upside. But also, you guys will know that I generally don't like trading into high news events, and so I will just avoid those times. So now, and also now, because I'm a little bit more educated about the macroeconomics than I was, let's say, 3 years ago, this is all giving me quite a bit of caution. So again, I don't want to be the perma bear who's been like screaming at the skies that the market's going to crash for a while, but because that's not really where we're at. We can continue on. We can continue up to 24, 25, even look higher than that. But certainly looking at the daily, MINX, our momentum oscillator, is curling back in from overbought territory. PPO Laguerre is been giving us the danger signal here for quite a while. And we do see this general decline in volume. As you guys can see the volume in the background here of MINX, you can see that the overall trend of volume is declining and not increasing, which we would typically like to see in a consolidation area. So again, same strategies apply that we've been talking about basically all week, guys. Keeping this very simple. Trading is very simple when you keep it very simple. Any daily closes above resistance, we can go long for. You can also be monitoring on the 1 hour or 4 hour for that. And, I do think it's important that we close below that 8 DEMA, right? That would be our impetus to go long. And until then, we can continue to trade this range. That's why we picked up the long position down here towards support. So that's an intraday position where we're picking up that long trade down here toward intraday support. We're going to take it back up here to the top of the range. We'll go short near the top of the range intraday and take that down. And anything that closes above one of these resistance levels, we'll go for that breakout long. Other than that, so we're holding our weekly positions. I am short on the daily. I'm long intraday. And if that intraday continues to climb up here a little bit higher, I will take profits, reverse direction, and move down. And look to take price down back to the bottom of the range. And the same thing applies. If we see a close, this is our current intraday level of support, coming in at about 22,893, and our daily support is all the way down here at 527. So again, nice distribution, nice potential distribution, nice consolidation range. Again, nothing that we haven't talked about before. 4 hour time frame. Now let's switch to our 4 hour time frame. Let's see what we got going on here. 4 hour pathways to profit would have me looking to short this maneuver right here. Why? Because we are underneath the baseline and we see that price has come up and retested the baseline. And typically that is a trading opportunity known as a reversal baseline bounce. You can also notice that we had this opportunity every time MINX has reset back at the zero line. Has been a good buying opportunity. Reset, buying opportunity, reset, buying opportunity. And Paralox obviously dipped into oversold territory right here. But as far as like a real primary position, pathways to profit hasn't signaled one since over here. So, and right here for a quick 4 hour upswing, but that's about it. Other than that, kind of all quiet on the Eastern Seafront here. Meso time frame volatility system. What do we see here? Again, a little bit more of the same. 4 hour oversold stochastic, recovering from oversold right now. MINX right in the medium line, and volatility is kind of dripping and dropping down. I don't really see any opportunities here except for the fact just to note that yes, we drove down towards support. Our momentum oscillators got a little oversold or reset on these lows, and so that was a good opportunity to take a long. From here, closer to the middle of the range, I don't really see an opportunity, so I wouldn't recommend really entering into a position right now for any reason. Unless, the only logical thing for me here would be most likely the short and not really the breakout to the upside. If you're betting on weakness, then entering a short here does make sense. Yeah. But that's not what I'm doing, so. Hourly time frame, again, 4 hours not really suggesting anything. We don't really get any direction from the hourly either. Again, I'm not mad at those who short here. That was kind of my takeaway from the 4 hour, and then obviously the daily. So definitely opportunity here, an ability to cross above resistance, nice big scam wick above, currently selling off into. We're going to have an hourly close here in about 20 minutes. So we can kind of see where that takes us. And then do I see anything? Oh, never mind. I saw a green candle. Completely discount everything I said about being bearish. Let's go long. Let's go. Just kidding, man. I'm just kidding. I've been going this whole time with no music. How can you guys let me do a stream without music? This is unallowable. I've heard some of you like it, some of you hate it, so. Yeah, 2 greens on the 1 minute, going all in. Let's go, boys. I'll load her up. Let's see here. Yeah, so what do we got here? Again, on the 15-minute time frame, we've got pegged volatility right here, overbought on the stochastic oscillator. Mink's got oversold here. And so I really wouldn't be taking any action at this point in time. Not really good opportunities to enter on high volatility unless, again, you want to trade a reversal. That's when you would look for that signal. Ideally, one of the better ways to use this indicator is to identify low volatility areas and then trade in the direction you want to trade and wait for the big move and then take profit after the big move happens. So very similar kind of what we're seeing on the daily time frame. All right, what we're seeing on the daily time frame. So let's go down and look at our range down here. We could see, all of this price action here looked pretty consequential in the moment, but now with the hindsight of how far and how strong Bitcoin can go, we can go back and see that, oh, these were good opportune times to enter when the big move was about to happen. And then pretty much I would have recommended taking profit out around here. We've seen that decrease in volatility now. So perhaps we even see a full vol reset. I mean, that would be a potential. You see a full vol reset and then create our directional bias here. Daily stochastic RSI is about oversold. So that's kind of interesting too. Well, we can definitely change it up. We can definitely change from the Saz music to the turn up music. I don't know if this is turn up. Maybe it's carrot. Maybe it's radish. Maybe it's celery music. I don't know. Could be turn up music. Himozabi asked, what is the price at on the 4-hour baseline? Let's go find out. And then we're going to do a broader market scan. Let's see here. Well, the 4-hour baseline is coming in at $23,289.08. And since I think Binance has 10-cent lots, or excuse me, Mintix, but on Bybit it's 50 cents. And I could be wrong about the. Could be wrong about the one or the other. All right, let's check in on the broader market, see what the cryptocurrency market is doing in general. Brought to you by CryptoBubbles.net, friends of the show. We've got a beautiful, lovely, nice green day in the cryptocurrency land. Everything green, nothing down except for Convex and Leo and Aptos. All right, so my condolences to everybody holding those tokens. But for the rest of us, congratulations, particularly anybody who continues to stay in on the threshold pump. It's kind of really resetting now. We've had kind of quite a sell-off and now a lower high. And Didex on a nice tear this week. Obviously trenching along and then having a recent surge in popularity, up 186% this month. Phantom having a very nice day as well, up 15.4% today. Doge is flying. Loopring is flying. Mutable X, not bad. Not a huge fan, but okay. Mutable X doing good. Lido recovering from its sell-off the other day. Flow as well. So again, shout outs to everybody. Good day to be in the cryptocurrency markets. Not bad. Maybe make sure to take your profits on short-term trades and reevaluate your positions if you just happen to buy something because Twitter told you to. Never a good place to be. Cryptonomics says I'm leveraged on Doge to the tits. Oh, you dirty bird. Okay. Oh, I know what we can do. Let's go ahead and go through and do a daily scan in honor of the fact that we're about to have a candle close. Oh, that was too much. Come on, guys. All right, so we're going to stick to the daily time frame, and we will be using my streaming PTP trading strategy. This is what's the best way to explain this? I think I've explained this many times, but again, for those of you who might be new, this is the strategy that I've been using on stream for many years. This is the strategy that I used to use on the daily time frame. Using the PTP methodology, this is the strategy I would utilize to analyze price and determine every single day at daily close whether I would be entering or exiting a trade. I don't use this strategy anymore. It's a good system, made me a lot of money, but it's not what I currently use. I do have a different, better system, and no, I will not tell you what it is. But this is quite good, and I think we can use this to root out some significant profits. All right, back to BTC USDT. We are trading above the baseline. Great. We've had a primary signal over here. Okay, great. Confirmed by all of our metrics. In this consolidation area, Wada Atar Explosion finally gave the exit signal. Parallax now on this current candle is dipping negative, and Minx has been oversold and gave the exit signal actually over here. But if we're using the 8 DEMA for our exit indicator, which we actually are nowadays, we didn't get the exit signal until right here. So all we're waiting for here on BTC USDT is really some continuation, a breakout signal, or for price to close below the baseline. And even then, we would not be really trading at this point in time. This would be a reversal. We're going to assume that the bullish trend will continue overall on the daily time frame. That's what you do with PTP. So we would not be looking to angle a short here because that would be a reversal. Even though Parallax has reset, Minx is still quite a ways away from catching up. All right, Ethereum. What do we got going on with Ethereum? Ethereum is trading below the baseline. Minx still quite a bit of ways away from the zero line here, so no reset on Minx. And Parallax negative. Wada Atar Explosion starting to show some negative delta here, but no increase in volatility. So we need spikes of volume, spikes of volatility, and negative momentum for a bearish trend to be considered attractive to enter. So no signal on Ethereum today. Ethereum name service, nice strong uptrend. Nice pullback here to the baseline to give us a re-entry opportunity. And we do see that Minx has just as of yesterday's candle crossed below in overbought territory. So that is going to be considered an exit signal. Otherwise, we remain in a nice bullish uptrend, and we would be looking for a continuation signal, which would be Minx crossing back above, or a pullback back down to our baseline right around $15.13 to re-enter into Ethereum name service. Matic, Polygon. Peckham, what's going on? Evening, Stewie Bud. Matic USDT. Again, nice strong uptrend on the daily time frame. We recently just had a pullback here to the baseline. So again, not really, didn't go all the way there. See how beautiful this pullback was? We had nice follow through. This one didn't quite make it. Again, some individuals will use this option on the baseline called the qualifier. So again, you could have used this setting right here. Peckham says, if I may, the people. PTSD from year of price collapse. People are loaded up and want to buy more. How could we expect 12,000 Bitcoin again, giving the FOMO inducing 25% pullback we all want? Huh. Good question. So, okay, so you're saying that, so again, if I can reduce your argument to its simplest points, what I'm hearing you say is that, well, it's been a really bad year. It's been such a bad year that now, for some reason, people have money. Or I see what you're saying. You're saying that all of this buying that we've seen over the last 3 weeks indicates that people are loading up. So how could we expect lower prices because of all this buying that we just saw? Well, that's a strong argument. It could be right. But to answer it, the people who just bought up all this cryptocurrency are now deep in profit. They're like 30% up. And short-term holder and long-term holders are not moving the market. So everybody that bought Bitcoin is currently a short-term holder. And short-term holders have a high probability to exit their position within 90 days of purchasing it. You have to wait. You have to hold on to your position for 6 months to become a long-term holder. And then you become statistically unlikely to exit your position. One of us become a Bitcoin holder, right? So there are long-term holders, or actually they're still short-term holders from prior to the FTX collapse, who are now in profit, who just sat down through all this drawdown. Now they have the opportunity for this influx of buyers coming in to take advantage of that exit liquidity. People who are buying right now, and who have been buying for the last 3 weeks, some of them will likely hold if price dips back down below their entry, but the majority of them likely will not. And so if there is a pullback here that is fueled by profit taking from short-term holders, because the vast majority are in profit, and fueled by older short-term holders, those in the 5 to 6 month tranche, taking advantage of the exit liquidity. Well, as price goes down towards the entry price of those who just entered, the vast majority of them are going to exit their position at a loss or break even as price comes to their entry, which will accelerate the movements down. Then if we continue going even lower, then we start moving into the liquidation and stop loss zones of those who took the longs in the first place at the best prices. And as they get stopped out and or force liquidated, that contributes to the downside pressure. And if we go below current support at 16,000, we start getting into very dangerous territories for institutional players, for example, like MicroStrategies, who have a liquidation level for their loan on their Bitcoin. We start getting into liquidation levels and significant financial crisis levels for companies who have a large tranche or stockpile of BTC. All of these things can really snowball and spiral into what would be several massive red candles on the weekly time frame. So that's just a scenario. But given everything that's going on, I still unfortunately believe it is the most likely scenario. And you may, and you did, and we shall, my good friend. Thank you for the opinion. And I would, and I might be wrong. Like, listen, guys, I don't get everything right. Like, I'm a technical trader. I'm really good at technical trading. Like, I get discretionary stuff wrong all the time. I'm a person. Tomorrow's going to be a big day, Great White says. Hell yeah, dude. I got a question from Zon here, a technical question. So I'm explaining it on current candles that have already happened. Yes, that's what charting is. Can he use the replay without seeing where he is in the chart and pick a place, then using his indicator for longer, short, and show if it works? Yeah, sure I can. Minx has about a 67% win rate, so like I can pick. Let's see here. All right, we'll just use replay. Wait a second, my computer is kind of slow. I'm on the laptop. And this is a pretty feature-rich or resource-rich feature. And there we go. And so I'm just going to turn away, and I'm just going to click somewhere randomly. Okay, here we go. What do we got going on here? Okay, this would not be a signal. This would be a potential continuation signal, but Paralox is not in agreement here. We are not green. But if I were to take a trade here, this would be a long trade because we are crossing above the baseline. Minx has crossed above the initiator. It's given the initiation signal. I would actually go on this candle right here, not this current candle. I would go on this candle right here, but as we can see, Paralox is below. And also, if we look down here to Wadatar explosion, we do not have a rising explosion level and the column is not above. So we would just continue moving on. Let's see here. Nope, not jump to real-time chart. We'll go forward. Let's see here. And yeah, here we would potentially go long on this candle. This would be a 3-bar rule. So when did we get, wait. 1, 2, 3. So yes, we would go on this candle with 50% risk. So if we were used to trade, if we were used to trading, 2% risk, excuse me, we would trade with 1% risk. So here we go. We'll mark out our entry point, and now we'll slap Quadriga on, and we will map out our first take profit, where we would take 50% of our position, and then we would map out our stop loss, at which point we would exit the position. Two other situations in which we would exit the position is if price were to cross and close below the baseline, or if Minx were to cross back down below the initiation line. So let's, oh, god damn it. Sorry guys, I jumped forward. I pressed the wrong button, but we already marked out where we were. So let's just go back in time and see if that was a winning trade or not. There we go. Okay, so there it is. There's the vertical line that I marked on my chart right there. That would have been the moment at which we entered. And I will scale this chart down. And the first red line here is where we would have taken 50% of our profits. Stop loss is where we would have exited our position. So we would have gone long. We would have hit our TP, at which point we would have moved our stop loss up to break even. And so that would have been a successful trade. Let's go forward and see where we would have exited. It would have been on this candle right here, and we would have exited still with the other half of our position in profit as well. Not a lot. So looking, if we average the distance between these, we would have made about 10.65% on 50% of our position. And then it looks like we would have made, let's see here, about 5%, 4.85 to 5% on the other 50% of our position. So you'd average those two numbers out and you would get your TP. So about 7.5% on that trade, unless I'm being, no, it would be, you take the averaged plus. So about 12.5%, I do believe. And again, we would have been taking that at 50% reduced risk. So if we would have normally made, let's say $400 on a winning trade, we would have made $200 there. So when we were talking about percentage, that doesn't matter because our position size would scale. So yeah, strategy doesn't win every single time. I'm not selling any magic indicator or system. This is an example of a Pathways to Profit trading strategy where I teach you how to build your trading strategy using technical indicators. I teach you how to backtest. I teach you how to verify them. I teach you how to trade objectively, how to trade at the same time every day. So there's nothing magical about my indicators. You could pick, 5 completely different indicators. It's the process. It's the process of putting them together. It's the process of picking which indicators you need in your system because the indicators do different things. One tells you about momentum. One tells you about trend. One tells you about volume. One tells you where to take profit. One tells you where to get out. So you need all of those things for a robust technical indicator strategy. There is no such thing as a magical, I'm always right indicator. Unless we're talking about bottom feeder, which is an indicator that Alex and I designed, then it's pretty much just right all the time and makes about, anywhere from 75 to 80% a year. And I stand by that. So we've got bottom feeder. This strategy has been running for about 2.5 years now, and actually just went long on Tomo. But yeah, bottom feeder absolutely rocks. And you guys can get access to that, the subscription to the premium trading group. And pretty soon we'll be offering all of our indicators. We've got like 8 of them a la carte. Bitcoin can keep going up nonstop like 2019. Well, fuck yeah, it can, dude. It's Bitcoin. Ron Legato says, so you're saying I could get MicroStrategies below 145 again? Maybe. Mastache says, have I read anything cool in our book this week that relates to trading? Yes, this is the book Limitless by Jim Quick. It's quite a good one. Man, I feel like yes. Let me think about this for a second. Oh yeah, so actually, yeah, this I just read this earlier. So this this part about note taking tip, you know, like basically target, and then so you think, or excuse me. So anytime you have a thought that you want to take down, right, you got to think about what you want to write, and then write it down, and then prioritize it, which means regularly looking at your notepad. So I just went over that toward the beginning of the show, how that situation came up where I wanted to take profit on that trade, and I knew that I shouldn't, and I wrote it down in my trading notes, and this is on my desktop, so I can look at it all the time now. JG says, no, it's a bull trap. The only people buying are the whales and manipulators who want to profit from us. Thanks, man. Thank you, Mud. Shout outs to you, my friend. I'd like the magical indicators for 500. All right, guys, that's all I got. One last quick thing before I leave. I've been teaching, whoa, I'm like way over here. I've been teaching students for the last 5 years how to build successful trading strategies. And if you guys would like to get a little, whoa, Jesus Christ. Microphone's like, look, man, we're not going to let you promote anything that you want to give to people, even if it's absolutely free. No matter how awesome it is, we're going to shut you down. Anyways, guys, I've written a free guide, the 5 mistakes holding you back from profitable trading, where I go over 5 of the most common mistakes I see my students make based on my years of experience and the thousands of students who've gone through the Pathways to Profit course. This guide is absolutely free, won't cost you a dime. All you have to do is go to the link in the description, 5mistakes.crackincryptocurrency.com to get your free guide. As always, let me know in the comments or in the live chat what your favorite part of the book was. And as you're reading it, just think to yourself, how can I apply these lessons or these strategies to my own current trading? Because all the information is actionable and you can apply it to your trading today. So go get your free copy, 5mistakes.crackincryptocurrency.com. And as always, let me know what you think. Okay. Complete computer malfunction. Anyways, that's about all I've got for today, guys. Thank you so much for your time, your energy, your tears, your cries, your passions, your screams of enthusiasm, as always. But this has been Breaking Bitcoin. If you guys have any questions, comments, concerns, sarcastic remarks, hot stock tips, death threats, feel free to drop them in the comment section. I'll do my best to get them as quickly and as soon as I can. And as always, if you want to work directly with me or my team in 2023 to grow and protect wealth in the cryptocurrency markets, lots of links down in the description to get involved with our community. Start trading today. We've got a lot of free resources on the website. We've got a lot of free resources in the Discord, and we have a lot of stuff for those who want to accelerate their game plan and really improve their trading. Until next time, guys, which will be tomorrow at the same crypto time, same crypto place, I will be back. Same crypto time. Hold on, let me checks notes. Okay, yes, I'm just supposed to say goodbye. Anyways, guys, I'll see you all tomorrow. Until then, everybody trade safely, and remember, risk management and emotional discipline pay the bills. That's how it works. Cheers, guys.